Welcome back to the second part of this presentation, where we'll be looking at the dollar yen currency pair uh, to try and look at the valuation of the US dollar in relation to the yen, uh, given the different dynamics and or economic slash fundamental drivers uh, which could affect the same. So, just going right into it, we see that the valuation of the US dollar, of course, holds a great significance in the global financial markets, influencing various aspects of the economy and investments. And there's a multitude of factors which influence the valuation of the US dollar, include economic indicators. We have monetary policy decisions, geopolitical events, and the market sentiment. But the key factors include interest rates, inflation, which have been the talk of the current economic arena, the GDP growth, you have the fiscal policies, and of course the relative strength of other currencies to which it is paired to, or it affects direct or indirectly through global trade at all. Now, financial market participants like us, of course, will closely monitor the valuation of the US dollar as it affects various other asset classes. Right? A strong dollar, of course, can impact the price of commodities, particularly those priced in US dollars, such as oil and gold. But in this case, we are looking at it in relation, in relative valuation to a counter currency, which is the Japanese yen. Um, Generally, just to touch on a very fundamental aspect of this, is that you'll find during periods of economic strength, of course, the US dollar, it's going to be appreciating, reflecting confidence in the US economy and or even attracting investors, right, to who are seeking even a safe haven, as an example. Um, the US dollar's performance, of course, is closely tied to the policies and actions of the US Federal Reserve, and interest rate differentials being a major factor in this, which of course have been also driving the current valuations of the US dollar and rally ongoing. Looking at the global demand and supply analysis, of course, you can see the US money supply has been slowing at its fastest pace since the Great Depression. There's a shift also from QE, which is quantitative easing, to QT, the tightening, coupled with the rising interest rates in a bid to fight inflation. This has also led to a lot of the dollar demand, as the supply has drastically reduced from the current market. So there are different, maybe many other factors, like the reset, also the raising of the debt ceiling, which of course will require borrowing by the Fed, issuing debt and all that. So all these factors would are ultimately, contributing to the dollar demand, you know, uh, and of course, and the rising and its appreciation in terms of in price. But let me jump onto the core aspect of this presentation, which is the technical analysis side of it. Looking at the US dollar, the Japanese yen weekly chart, we can see that it's in an uptrend. It's clearly making higher highs and higher lows. Price has recently is now trading above this 139 200 level. These were June 2022 highs. Resistance levels now turned support in this area. Price has also broken kind of a pseudo long-term downtrend line, coming from October highs last year. and looking like price is trying to make a way to retest those highs, which is the basis of my investment thesis in this presentation. So my technical reasons for this would first and foremost span, or rather be evidenced by first looking at the long-term trend. This being a weekly chart, my long-term my long-term trend is upwards. Why? If I was to look even briefly, this is a brief momentum chart. Uh, Looking at the MACD momentum has been increasing steadily month on month. Looking at the weekly, we are seeing the same. Week on week, momentum has been uh, going up slowly. But the one interesting fact on this, the weekly chart, is that it's on a perfect, rather almost perfect Elliott wave outlook, right? For those of you Elliotticians out there, such as myself, we can see that on a weekly, long-term trend, price is on. It's on from bottoming from its fourth wave and now heading towards wave five. Already, this is wave five unfolding, and that is evidenced by price already trading above the waterline from the MACD. So that evidences that we're already now in wave five, and wave five manifesting. And from purely from an Elliott wave perspective, the minimum target for the wave five to terminate would be at the height of wave three. This is the 151, the all-time high, all right? And and so that being the minimum target, I'm seeing it going a little bit further. The recessionary environment, and the fears unfold. But from a purely technical perspective, looking at the Elliott wave, I'm having a long-term upswing target to the 151 as my primary target. When as this wave five uh, completion, I mean, completes this unfolding of the wave five completes. Um, Coming down to the daily chart, our daily chart. Yesterday, I had also made this call, but the daily chart, we can see the momentum on our stochastics. It looked overbought, not ideally overbought, but our ideal situation for this on this chart of the stochastics, as I was making the call yesterday, was to wait for at least this the stochastics to come to the oversold level, which it did, which it did right here, which it did right here. And I had put out this line. This was a support area, as an exhaustion from this swing, from this upswing to this level, as an entry level for, when it is retesting the back of this trend line. This trend line comes from the weekly chart, the trend line I mentioned earlier on the weekly chart, which price just broke, and then the retest of this chart of this trend line was the retest as price came back down. This was our entry level uh, for this morning. So, but this was the entry level to enter for the continuation of price moving forward. All right. Um, Having said that, we're looking at, because price has left already, as starting the second leg up. uh, the levels of our stochastics is still just coming right down from the oversold levels, uh, pointing upwards, so signifying further moves to the upside. There's momentum to the upside. Um, there's momentum to the upside, and then I drew kind of guideline, and or let me call this, yes, it's a channel. It's basically a channel, uh, but as we can see, price, of course, it rejected from the top side of the channel yesterday, near the top of the channel. Uh, but looking at the price dynamics in this area, we have kind of this was kind of a triangle, so to speak, in this area. So kind of a triangle pennant from this flag, you know, from this pole of this flag pattern, coming from these lows, from the May lows, right, and the 200-day moving average, which provided support. Now, price is currently dealing above a major key level, which is a 39, 139, 200 area. Yeah, and we expect that if price is to hold in this area, it is going to continue to the upside and test the 143 700 level. So the major, while I consider this as as a channel, but loosely, it's not a perfect channel. I lose it just loosely as a channel. We want to see price trading and holding above yesterday's high. We want to see price holding above 141 329, which is yesterday's high, say 149 330 highs. So I want to see price dealing above this area for continuation and re-entry, so to speak, and re-entry, so to speak. But overall, on the intraday, we see there's a high chance or possibility that the move has already, you know, the day's move has already manifested. And I expect, from a short term trading perspective, we could take short positions on the 141 660 level, just for a quick scalp. But because we anticipate that price is going to go higher for the foreseeable uh, near-term future, these highs, the 149.25, could provide re-entry levels. These areas, this price would provide re-entry levels. So I'm drawing too many lines. I hope you don't get confused with that. So in this area, we're expecting this to be our entry level intraday for price continuation. And if I was to pull up my Fibonacci's real quick from these levels here, so that, yeah, so that would be around the 23 23% Fibonacci uh, retracement levels. I prefer it to come a little deeper, right here at the 38. I prefer it to come a little bit deeper at the 38%. Um, so overall, this is that is my technical outlook on the dollar yen. Um, and why I'm still bullish on this. First and foremost, you'll find the commitment of traders is still on the bullish side. The open interest is bullish, and that's because the big money is playing the carry, the positive carry side of this trade, right? So you'll find the interest rate differential as right now, the US is at 525 basis points. Uh, the yen is at maybe only 7 basis points. So the interest differential has been huge, and so there's a lot of benefit in playing the carry side of this trade. And so that being the main and major fundamental reason as to why I feel that uh, this pair is going to rally still and maintain a bullish side of it, the bullish sentiment side of it. Um, the Comparing that maybe to the yen side of that spectrum would be that the yield curve control is still in place on the Japanese area, on the Japanese economy, and because I believe from a fundamental perspective, rates are going to be higher for long. I don't see the Fed cutting interest rates in 2023. Of course, there was a pause the other day, but I don't think a pause is a pivot. And with the inflation remaining sticky, I still believe that there are more rate increases to come throughout the year, and so the pair is set out to rally and at least even retest the highs of the 151 highs, October highs. So, having said that, that is just a brief overview of where I see this currency pair headed. And thank you for joining me. I hope this was insightful to you as it was for me. Thank you.